Time now for Financial Friday on WOMI with your host, Drew Watson, sponsored by Align Wealth Management.
Maker Incorporated.
Hello and welcome to Financial Fridays, brought to you by Align Wealth Management. This is the Memorial Day 2023 edition of our show, where we will ask you to remember your loved ones that have passed. And I'm coming to you live from the Garden Spot, a virtual Eden on Earth, right here from Harrisburg, Illinois, on the shores of the county ditch, where it all began. Coming to you live this week after a huge and historic day on the NASDAQ, as shares of NVIDIA continued to power through resistance, and after a blowout earnings quarter, had lifted the entire NASDAQ index up about over 1.5% for the day. The Dow closed lower for the week, as we've seen from time to time during these debt talks, and the S&P was positive. But again, yesterday's market action was all about technology and the changing role of that in our nation and in our life. As I said, we've got a great Memorial Day show lined up for you. Keep listening here on this station as we come to you with a special edition live from Harrisburg, Illinois. It's a Memorial Day Financial Friday, brought to you by Align Wealth Management.
What do you want to do when you grow up? When we were young, it's a question we were often asked. As we get older, our passions become clearer, our pursuits become careers, and if we're diligent, we begin to plan for the life we want to live. That's why at Ameriprise Financial, we ask, what's most important to you? Starting with our confident retirement approach, your Ameriprise Financial Advisor will ask questions that will help you arrive at a customized plan that can help you realize your goals today, tomorrow, and throughout retirement. With the right financial advisor, life can be brilliant. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, Inc., today at 270-684-8424. That's 270-684-8424. Office is located at 2708 New Hartford Road in Owensboro, Kentucky. The Confident Retirement Approach is not a guarantee of future financial results. Investment advisory products and services are made available through Ameriprise Financial Services, Inc., a registered investment advisor.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and this is the investment segment where we take a deeper look into kind of what's been going on in the markets. And as you know, this has been a week of some retracement based on fears about the debt ceiling negotiations and what appears to be driving very dangerously to a cliff financially. Now, today's segment, we want to thank our friends at Ameriprise's Investment Resource Group, where they talk about quality stocks and maybe why they could be a better buffer, let's say, in the broader market. And as I said, as you know, investors wait for the broader market and economic skies to clear, there could be a recommendation where investors may want to look into higher quality stocks. And although historically higher quality positions have outperformed lower quality during times of economic weakness, we've seen this to a lesser extent in the last really 12 months or so. Notably, despite market concerns about near-term economic conditions, and let's say Ameriprise's in-house view of a greater than 50-50 forecast of a mild recession, high-quality stocks are still relatively cheap compared to, quote, low-quality stocks, unquote, providing an opportunity to growth when the sun starts to shine. And what is a quality stock? Well, a quality stock, there's several factors that go into play to define those. But typically there's an ROE rank, that was a return on equity rank. So companies generating higher return on equity in the most recent reported year, as well in the past 5 years, are ranked high for quality purposes. Leverage rank, so companies with a lower leverage ratio, a lower ratio of total debt to total assets are ranked high in this category. And a stability rank, where companies with steady top line and bottom line growth rates are ranked high. To compare quality versus low quality stocks, Ameriprise ranked the largest 1,500 U.S. listed companies based on an equal weight of three metrics that I just discussed. They then assign the top 20% as high quality. These stocks have higher ROE, lower leverage, and relatively stable top and bottom line growth. Now, on the contrary, what they define as low quality are the bottom 20% with the lowest ROE, higher leverage, and irregular top to bottom growth. Now, they put this in a chart, but in your mind's eye, you kind of go through this, that their chart shows the relative performance of the high versus low quality stocks based on the methodology I just described. And you can kind of get an idea when high quality stocks outperform and then vice versa. And typically the performance of high quality stocks have been at a metric of almost 2.4 times the performance of lower quality stocks just in this most recent market cycle. And what they've shown is during periods of recession or other periods of market stress, going back to 1995, there have been three periods when high quality stocks outperform their low quality peer by a large margin. And this large margin is, almost 2 to 1, 2.5 to 1. So you can go back to the dot-com crisis, the recession that happened after the dot-com crisis. The great financial crisis showed a increase in performance by almost 15%. So if you look during the 14 months from August 1999 to October 2000, high quality stocks returned 37.6%, while low quality stocks returned a negative 2.9%. During the financial crisis, high quality stocks experienced negative returns. However, their 21% loss during that period of February 07 to April 09 is much better than the decline of 52% in low quality stocks. And if you looked at the COVID-19 pandemic that obviously occurred during 2020, high quality stocks lost 22% versus low quality stocks losing in excess of 42%. If you look at, that's a base case, and if the base case is for a shallow recession, if you're wrong about that and you get a worse than envisioned recession, high quality stocks could cushion the fall as they did during COVID and the great financial crisis mentioned above. And then, another reason is high quality stocks also can provide long-term benefits. As an example, investors in high quality basket described in those three categories would have seen their portfolio grow to 36 times their original investment from December 1994 to April 2023. Conversely, those in low quality basket would have received just a 14 times their original value. It's worth noting that high quality stocks do not always win. For more than 2 years, from March 2020 to May 2022, the market experienced a long and sharp junk rally, and during that period, high quality stocks were up 68%, lagging behind the low quality basket, which was up an amazing 171.5%. All three quality factors experienced negative spread during this period, meaning stocks that ranked high in quality lagged those ranked low. And for example, stocks with high return on equity returned 86% during the little bit more than 2 years, while low ROE stocks almost doubled that. Now, the junk rally by a lot of people's valuation was done by monetary policy. But if you look kind of finely, as I mentioned at the beginning of this segment, high quality stocks are still quote unquote cheap relative to low quality. On average, from 95 to 2023, high quality stocks traded at a PE of 1.4 times that of the low quality stocks. And as of the end of April, this ratio stood at 1.3, or about 7% below their historical averages. So there is potential opportunity on the horizon here, but the debt ceiling does remain number one focus for market participants. And hopefully over the next any day, we could get a deal on this and put this behind us. Keep listening to Financial Fridays. We'll be back after a word from our sponsors.
When today is unpredictable, You need sound advice and strong support to help you stay focused on your long-term financial goals for tomorrow. Ameriprise has been guiding clients through challenging times for over 125 years. You can take comfort in working with an advisor who's backed by that strong experience and who's there to guide you with personalized, goal-based financial advice. Together, you and your Ameriprise advisor can plan your future while navigating your now. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, LLC, today at 270-684-8424. That's 270-684-8424. Offices located at 2708 New Hartford Road in Owensboro, Kentucky.
Hello and welcome back to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and this is the financial planning segment of the show where we cover really what it is that you're looking to accomplish from a financial planning standpoint. And this episode, what we're going to get into is, you could call it budgeting, you could call it forecasting, etc. But one of the things that we know, being a financial advisor, not everyone may have an exact budget of what they spend their money on with a, what I would say, fine-tooth comb. So if you are thinking about retiring and you're saying, hey, I don't know where my money's going, well, that's, one, your certified financial planner should help you find out where your money's going. But more importantly, what's a really good, starting point if you're not 100% comfortable with where your money's going, that would be to basically look at what your net pay is. So specifically speaking, if you're taking home, just in round numbers, $2,000 every other week from your job, and you're paying your bills and everything is going along smoothly, it is very easy to say, what, if we set up a budget of $52,000 a year, which is $2,000 every other week, as our kind of budget amount for where we are going into retirement, and your financial plan looks very good, that's probably not a bad number when it comes to a benchmark for what your expenses might be. It's been our experience in the business that if you have a pretty good handle on what your expenses are from a day-to-day standpoint, and then we kind of dive down to say, okay, what expenses may not be here when you're retired, but what expenses may be new expenses when you are retired. That's a good way to get a baseline as well. Now, if you're a person that uses a credit card daily and you pay off your credit card bill every month, a lot of credit card companies will go ahead and characterize your expenses as well, so you can take a deeper dive. Are you spending money at the liquor store, at the clothing store, at the grocery store, more so than average? But certainly there are plenty of tools in this day and age to help identify where and how people spend their dollars. Now, another thing to think about is healthcare expenses, because I think a good financial plan will have healthcare earmarked in a couple different categories for retirement, specifically the time that you're going to be spending before you reach Medicare eligibility. that's prior to age 65, and what those expenses might be like, because if you have the good fortune to be covered by employer medical coverage post-retirement, your financial planner can calculate with you what those expenses might be. But then once you hit Medicare age, you can look at, based on what your income is, how much your initial Medicare premiums will be, either out of your Social Security check or what you send them if you're not drawing Social Security. And then also get several quotes on what might a supplemental type policy cost. And you could, pencil in a pretty good health insurance premium there. And if you want to plan it very conservatively, find out from Medicare and your Medicare supplement or Advantage plan what your maximum out of pocket is, and just have a figure inputted for hitting the maximum out of pocket Medicare expenses every year. And certainly what you might be doing is building a pretty good worst case scenario for healthcare expenses. If you're a state retiree covered by state plans, you can also have your financial planner increase or put in planned increases in premiums of anywhere from 2%, 3%, 5% per year. So you can plan out, kind of scenarios where the state says, hey, thank you for your time and service for the Commonwealth or the land of Lincoln or the great state of Tennessee, but you're going to have to pay more for your health insurance. So that can all be covered in a very well done financial plan, and it's been my experience that sometimes those are better covered from the standpoint of line item expenses. That way, if you want to go in and make an alteration to each one of those, and I would say I'd have those itemized by spouse. That way, in a situation where you're looking at what happens if one of the married couple predeceases, you already have a game plan that's pretty well set up to take advantage of whatever might come along. But from the auspices of financial planning, it's not the end of the world if you don't have a budget. Now, I would expect that most financial advisors would probably send you out of the office with some homework to say, hey, we need to come up with a monthly budget. And certainly probably 30 minutes maybe of dedicated time would be able to pull that off, hopefully, that you could see where your expenses are and where they're not. Now, I've been my experience where I very rarely have had an episode where clients have not found it worthwhile to go through a budgeting process. Even people that may keep their expenses on Quicken may also see that there are benefits to be had by keeping better track of their expenses and income as it comes into the household budget. So keep that in mind when you think about financial planning topics, that budgeting is very important, but a good financial planner will always have a starting point from what you're taking home today. You're listening to Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and we will be back in 60 seconds.
What do you want to do when you grow up? When we were young, it's a question we were often asked. As we get older, our passions become clearer. Our pursuits become careers. And if we're diligent, we begin to plan for the life we want to live. That's why at Ameriprise Financial, we ask, what's most important to you? Starting with our Confident Retirement approach, your Ameriprise Financial Advisor will ask questions that will help you arrive at a customized plan that can help you realize your goals today, tomorrow, and throughout retirement. With the right financial advisor, life can be brilliant. Call Align Wealth Management, a private wealth advisory practice of Ameriprise Financial Services, Inc., today at 270-684-8424. That's 270-684-8424. Office is located at 2708 New Hartford Road in Owensboro, Kentucky. The Confident Retirement approach is not a guarantee of future financial results. Investment advisory products and services are made available through Ameriprise Financial Services, Inc., a registered investment advisor.
Hello and welcome back to the Memorial Day edition 2023 of Financial Fridays, brought to you by Align Wealth Management. I'm your host, Drew Watson, and this is the email bag segment of the show where we answer your questions, and you can feel free to email those to us at william.a.watson@ampf.com. And so today is, where we will discuss the situation. It is Memorial Day weekend, and one of the things we want to discuss is questions have come in typically with regards to estate plans and how estates work, etc. And so this is a good week to kind of answer all those questions as we try to memorialize people in our lives. As always, check with your attorney, and we realize people listen in multiple states, and different rules may apply in different states. So let's kind of jump in, and typically people think normally knee-jerk reaction is that, I would say everybody needs a will, and secondly, that trusts are just for rich and famous people. So both of those are kind of, I would say, wildly inaccurate. And let's start with the first one first, is everybody needs a will. Now, what a will is exactly is it's the all of what you own, the estate, that of anything that you would own individually. It is instructions left for the court to identify who you want to carry out the final disposition of those assets. That's kind of a Cliff Notes version of that. But essentially, if all you owned in the whole world was a joint checking account with someone else, not having a will isn't going to be the end of the world, because the person you own the account with, assuming it's a joint with rights of survivorship account, would become the new owner of your account if something happened to you. Likewise, any account that's owned and has a beneficiary on it, the same rule applies. So if everything you own is joint or has a beneficiary, a transfer on death, etc., your will isn't going to dictate where that goes. Now, one thing to consider, if you've spent many hours and many thousands of dollars drafting important estate documents, but you fail to change the title or the ownership of your assets to the way your will or your estate reads, well, you've kind of shot yourself in the foot, because how everything owned trumps how your will reads. So this is a two-part process. It's not just drafting a will, but it's making sure your assets are titled in a way that makes the will you create be able to handle them. And generally, most of your basic estate documents, like a will, a power of attorney, healthcare power of attorney, living will, are some form of a state statute based on the state in which you live. Now, I'm often reminded, this show originates out of Owensboro, Kentucky, and hardcore Federalists will remind me, Kentucky is not a state; it's a commonwealth. But and that was a joke. But if you if you change residences from state to state, it's always a best practice to meet with a local attorney to see if anything needs to be altered in the previous will you had from your other jurisdiction, because perhaps state statutes that apply in one state do not apply in others. Now, you also can get into the whole mess of a do-it-yourself will and, download one online and et cetera. And what you have to know is the state in which you live. Is this will going to be compatible with the laws of the land? And then also, what are the rules and the requirements around making sure this is a what I would call a whole cloth document, meaning knowing exactly how many witnesses you need to have, how those witnesses needed to be documented. Do they need to be notarized as witnesses? So there are a whole list of items that go along with a do-it-yourself will in order for it to be recorded and to be able to be submitted to the court and passed off as a accurate last will and testament. Now, let's go to that second part of the original question about trust, that you only need to be rich and famous to have a trust, and that's not necessarily true, but trust is a large term like technology or healthcare that can encompass many broad topics and also kind of fill the gaps into the minor cracks and niches of the world. But generally, what a trust is a document that you draft with the help of an attorney that says specifically you may want some assets owned by this trust, which can outlive you and your spouse for multiple reasons. Sometimes people will utilize trust because they own property in various states and they don't want to have that property fall into a probate proceeding in multiple states, so they may have a type of trust own that property in multiple states instead of them individually. Also, they may want to have a bit of privacy, or as they say across the pond, privacy, when it comes to their estate settlement, and they want the trust to own certain assets in order to provide some additional privacy as they execute their estate documents. Now, trusts that are typically living trusts, that means you create them while you're alive. The taxpayer ID number on the trust is also your taxpayer ID number. Those types of trust documents typically don't provide a lot of tax and asset protection. To get into the type of trust that provide those more secure protections, traditionally you have to make a trust irrevocable, meaning that once you set this down in writing and sign it, it is forever in motion and, as the name would imply, cannot be revoked. A living trust, on the other hand, can be changed willy-nilly, do whatever you want pretty much. But an irrevocable trust, as the name would suggest, is one that cannot be revoked. It typically has its own taxpayer ID number, has to have a tax return filed for it, and has special tax rules governing what's the liability, and has a separate kind of tax structure that is pretty punitive in an irrevocable trust. But certainly what's in the trust is very private because, once the trust is created, there's a little kind of I don't want to say shield, but it is definitely a privacy shield and can be an asset protection shield as well in case something goes wrong, that those are assets you don't own personally. If people are suing you, they're owned by the trust. Now, something always good to talk to an attorney about is whether or not you want to put an automobile in a trust, because there's a lot of liability with an automobile. And if the whole idea behind wanting to create a trust is to limit your liability, you may not want to place items in the trust that help create liability as opposed to help mitigate potentially liability-filled situations. So there again, as we think about Memorial Day and all those that have gone before us, think about your own estate planning, and don't put off getting a will or a trust just because it may sound intimidating. I'll close with this. Other documents are just as important. Healthcare power of attorneys are critically important in this day of HIPAA, and insurance companies that don't want to help you, let alone help your family or friends while you're incapacitated, and general power of attorney documents such as durable power of attorneys, which can help people manage your affairs financially should you be incapacitated. But we hope you have a wonderful Memorial Day weekend with your friends and family. God bless. We'll be back same time, same station next week.
This program has been paid for by Rainmaker Incorporated. This is WOMI Owensboro, 99.1 FM.